Now, here's a question, and I worry about this myself. If you have contacted by the California Franchise Tax Board, and then you go in there, you take care of business, you file with guidance from the folks at the Tax Resolution Institute, you file those unfiled returns. Is that now going to trigger the IRS to come after you as well?
That's an interesting question, Brian. The IRS does report to the state. So if you're audited, they'll report the results of an audit to the state, or if you file with the IRS, the state will know. The state doesn't always report the filing to the federal. However, if you have W-2s, 1099s, sale of a residence, sale of stock, anything that would have been reported to the IRS, and you've only heard from the state, it's just a matter of time that you're going to hear from the IRS. Remember, we talked about this in a show a couple of weeks ago. They're not going to lose your transcripts. They're not going to lose the records of the 1099s and W-2s and other 1099.
So that's no strategy, right? If your strategy, as you listen this afternoon, is maybe they'll lose my information. Bad strategy, right?
Bad strategy.
Don't put your eggs in that basket, right, Jim?
Correct.
Okay.
It never works to forget that the IRS may not exist. They exist.
What's the difference, guys, between tax evasion and
tax avoidance?
Yeah,
that's the
really, Peter. What is the difference?
Well, we're all entitled to structure our affairs to pay the least amount of tax. I mean, that's avoidance, if you will. But evasion is the conscious effort to manipulate your situation in a illegal way to evade paying taxes. One is criminal, and one is proper tax planning. That's the difference.
Because we hear these stories, and of course, here we are a month out. You got to file in just about a month's time to the day, and we all, you hear the Wesley Snipes, and all these famous cases of these people, and then people go to jail, and you're sitting there maybe haven't filed for a few years, and you see Wesley Snipes in jail. It scares the what out of you. But
it should, because people should file their taxes. I mean, what we do as professionals is give advice as to how to minimize tax, how to minimize payment to creditors, how to do it legally. But if you forget about it or you ignore it, then the taxing authorities are going to come after you. So again, face the problem early, get professional help from people like the Tax Resolution Institute or my firm, Greenberg and Bass. We can help you look at your financial picture and figure out how to deal with it as opposed to ignore it.
And let's talk about that. And I think that's a great point you made, Jim. Let's talk about the affordability of this type of help and the services that you guys provide. Peter, Stephan at the Tax Resolution Institute, you have people come to you whose wages are garnished. I mean, these people don't have a lot of cash. How do you navigate around that? Because obviously you're providing a service. I mean, and obviously you're paid for your service. I know people go in there. There's a no pressure consultation. It doesn't cost any money for that to find out where you stand. But you guys, by the nature of what you're doing, you're dealing with people who have financial problems. That's fair.
Correct.
We do have to get a reasonable a down payment or retainer, if you will, to start work, because we have very competent and therefore at whatever level expensive professionals,
right?
Lawyers and CPAs and so on, handling your tax resolution matters. But we're always there to work with clients, and although we like to get the full retainer up front, as most people do, I know Jim doing a Chapter 7 bankruptcy is required to get a full retainer because he doesn't want to become part of the bankruptcy.
Yeah, but that's a great point. But, Jim, really the question becomes, I mean, the person listening, how much is it going to cost if you do nothing? What's the price you pay if you don't do something?
The price you pay is having a creditor take away the control that you have over your assets. In a Chapter 7, there are assets that you can exempt. There's $23,000 worth of assets that you can exempt in a Chapter 7 in California. So it's not that they're going to take everything, but if you do nothing, they will take everything. They'll go to your bank, they'll garnish your wages, they'll take action that you can't control. In a Chapter 7 or a Chapter 13 or a Chapter 11, you retain control. And you may, in fact, you probably will have to pay back in a Chapter 11 or Chapter 13 some of what the business owes or what the individual owes, but you have control over it. Someone's not going to take it without your consent.